share screen, right?
Hi everybody, this is Phillip Guan, CPA. Welcome to the classes to teaching how to do tax return. This is classes number 9. And we have been teaching for the past 2 weeks. So the past classes have been in YouTube, so you can review it. They're both in English and also in Mandarin. So now let me look at the left side of the screen, practice return number 9. All the information in the practice exam are not real clients. Okay, those are all make-up numbers. So there's no confidential information in here. Okay. So we are going to learn something new today. This is the very first hand in the left side, farm income. Okay. So and then we also need to learn auto expenses as well as the estimated tax payment. As well, tax payment is not something new. Farm income as well as auto expenses. Auto expenses also is not something new. So now, this is the taxpayer. As you can see, those are all make-up number. Include the name and social. They're not real clients. Okay. So in they're husband and wife. So as you can tell, the filing status is married by Johnny. I am still using the Drake tax software 2021. The 2022 does not have a state, and also this practice exam is connecting with 2021. So they're all similar. Okay, I have the 2022, but it's very similar. So now, for the client in the right side, first we choose married by Johnny, and then we're going to put the social or tax ID for the taxpayers. And then, as you can see in the left side, they're highlighted. They're all input in here. So now the spouse information is in the left side. I highlight it right now. They're inputted in the right side of the screen. So now, this taxpayer, they're living not in state of California. I am making they live in state of California for the purpose. I want to show you the state of California tax return. So I change it to my zip code 94134 for illustration purpose. Okay. So now, as you can see, HC is health insurance. They both have health insurance. And also the ID in this situation, more likely, this one is not a state of California ID. Normally, state of California ID with the letter, right? Like A, something.
Water.
And B. So, please unmute. Please mute yourself, so that we are recording. Thank you, and welcome to the classes. The state of California, and then let's say there's some letters, state of California numbers like that. Okay. So now they are recovered. So now let me see whether or not they have kids or not. It doesn't sound they have kids. So now in this situation, whether or not they have that 2800, they do. As you can see in the left hand side, I highlighted file like that. So therefore, you're going to tell the software, say, hey, they received it. They should know in here. But when you prepare the 2022 tax return, when we in early 2023, most likely we're not going to have this unless we get surprised. Okay, so now how can we get rid of? How do we get out from here? Escape. So now in here, assuming all the other information are correct, and then also there's no foreign asset we check this box. They shows they are not, they don't have foreign asset or do not have more than 10,000 of the US dollars of foreign asset. Need to report it. And there is no virtual currency in here, right here, and show. So now, how can I get out from this screen? Well, you click in here, especially when you split the screen. When you want to move the screen, you need to be clicked somewhere on the screen. So that way, the computer knows you are going to move this screen. So escape. So now, and you remember 3 objectives of learning objective. One of them is called estimate text. So since we are right here, the estimate text right there. They are going to say it in somewhere. Let's look at that estimate text information. There's some more information in here. For some reason, they stuck me in the middle. That's fine. Okay, the computer is thinking. As you can see, in the very bottom of the left-hand screen, they say the taxpayer make the estimate tax in the amount of 6,000. They did not say it how to do it, but it say it in a normal situation is 1,500. They pay it every quarter. Let me see. No, make 4 estimate. No, hold on. No. The make 4 estimate takes in no, it looks like they're 6,000 each. So now, in here, for the tax year 2021, April 15, 2021, June 15, 2021, September 15 of 2021, January 15 of 2022 for 2021 tax return. But when we do the 2022 tax return, this will be 2022, this one will be 2022, this is 2022, and this is 2023. Now, in my right-hand side, this one is called overpayment from the last year. Let me see whether or not there is an overpayment in the situation. I may have been changes. Let me see. Let me see. It doesn't say. Let me just delete these numbers. Okay, assuming they just pay 4 quarter 6,000 each. When you have something like that, normally in the right side, you need to think about the next year estimate tax. So you need to do this. So want to round up the number to the thousands. So that way you can choose it to like this, near the nearest thousand. So now, if there's any extra, you can use it for the next year. So I use option A. You can choose others, but I normally like to say since you need to pay the estimate tax anyway, so I do it this way. So now, in the example, they did not say the state because this is only for the federal. So now, in here, assuming they also pay estimate tax for state of California, let's say 2,000 each quarter. Now, this was not an example. I just make it this one up to show you for state of California. Okay, now in here, state of California. I am recording, am I right? Okay. Am I recording right now? I am, right? Yes, I am recording. That's very important. Ooh, there's quite a bit of people in here. Thank you. Welcome everybody. Okay. So now, one time we forget recording and then we have to redo again. So now, and we are finished this estimate text. What if I would like to get out of this screen? So we escape. Okay, now we escape in here, and then we go to as go sequence. So this is the taxpayer with a husband and wife, no kids in this situation, and they pay estimate tax. Let me see if they have W2. They do have W2. Okay. So now, as you can see, it's a spouse at W2. Now this is spouse. Now, those are all make up name, and not that I know of. There is some a client, the last name is like this. Okay. So now this is a spouse. So it matters. So you come here, the wage, and then you make sure you choose the right person. Okay. So now S stands for spouse. Click. Now in here, as you can see, they still is not still a California address. If you want to be connected back to the new address, I change it. Here's how you do it. You go to choose the other one, which is not supposed to the correct one, but to let the computer click taxpayer and click somewhere. You see, they go back to San Francisco. Now you go back to S. They stay there. Cool. Now, I am look at this situation. As you can see, the first thing you want to make sure is the EIN number. EIN number, as you can see, they change it. I mean, the JTAX software changed it. It was like end with 2, and then they changed. It's supposed to be the EIN number doesn't change when you do with the same taxpayer, just like the social for each and every person doesn't change. The name of the person can change it, the name of the company can change it, but the EIN won't be able to change it. Let's say when you see the EIN number does not match in what you record, the first thing you have to make sure, look at the last year original situation, see whether or not you put in a long one. Now, nowadays, when you do e-filing, it does matching the IRS e-filing database. So if the EIN number doesn't match, it doesn't go through it. So it's very important, so make sure it's good. Okay, and then the name actually changes, as you can see, isn't it? Assuming this is it, the address. So I change it to state of California. Okay. So now the amount we just follow the example. 65,000. The withholding only 6,000. So now, in example, box 1, 3, and 5. As you input 1, they automatically make 3 and 5. They are the same. In this example, they are, but not all cases. Assuming, and this person put in 5,000 in 401k, let's say. Guess what this person's W2 is going to look like? This person's W2 is going to look like this. Instead of 65,000, this will become a 60,000. However, this will be still remain as 65,000. What that really mean is that 5,000 you put it in 401k is not subject to income tax for the year of this tax year. However, the whole 65,000 will subject to Social Security as well as medical tax. Okay. So let's go back to as the original, which means this is 65K. Now, those numbers are topped up automatically, but you also want to make sure it's correct. Now, if you in case sometimes the client switch the job between a year and they will have a chance to have an overpayment for Social Security and medical tax. So, but this way, they will get a refund in a 1040. Okay, so not in these cases. So I changed this one for state of California, assuming this person have another 2,000 for estimate tax. So now let's look at what else we have. Okay, there are more informations. Okay, there are more information we to learn. Do you remember? This is something new for us. Okay, this is not the normal self-employed business. Normal self-employed business is a Schedule C like cat, and in the second tab, in the C. But this situation is farm, so it's F. So next to the C, in the second tab of income tab, in the left side, like there. You see it? Okay. Now, who have this form is the taxpayer. Okay. So now the information is like here. Okay. So now the first thing you want to make sure the tax ID, okay, is important. The tax ID is correct. Okay. In here. And also you want to make sure it's what kind of the business. You need to choose the right code. Okay. Now, and then the next one is there. Okay. They did not make any payment, need to require for issue 1099. So when you choose no, the next question does not need to check yes or no. Only if yes, you need to check yes or no. They say in here. Now we are going to look in for first we put the input the income. Now the one in the left side, the highlighted, is what we are going to put it in, and the one we are going to input it. Okay, we are going to input it in here is 5,000. Now because I choose, choose this example, and then the second one. Now, oh no, it's 5,900. Okay, 5,900. The sale of product is raising. We delete this one. We also delete this one. So now I am going to delete this. So that way we're going to match it. So I just finished this, the first one. Now I'm going to do the second one. You show some product, you raise. So which is this? One, two, the high. When you click on, when your mouse click on it, they highlight it. So now you write in, before you enter, your eye should go back to look at for the original. Oh yeah, it's right. Okay, now you enter. Now the next one. Now the next one is this 2,800. Where is it? It's like culture payment.
4B.
4B. Yes, you're right. Right here. Thank you. You see it? Like that. Okay. Now next one, we're going to be cost of item bought for resale. Guess what number is it? Cost of item bought for resale. So this is this the number the cost of item bought for resale. Like here.
1.
You see it? In the right hand corner, 1B, be like boy. In the right side, there are two numbers. The lien is this one can fit in two different forms, and so in here there's easy form, there's a ledger form. Okay, now we finish all the income. Do you want to see how they work? And then now it's all the expenses. Let me see. It may be okay. Chemical. Now all the income is in the left hand side. Unlike the Schedule C, right? The Schedule C in the upper, and then the expenses in the bottom, right? So now the Schedule F is the right hand corner. The right hand side is the all incomes, and then the left side. I'm sorry, the left side of the screen. Right now, the one that I'm click on it. Okay, the one I'm click on it is in my right side of the screen, and then the left side of that right screen, right here. So this whole thing are incomes. We finish this. Let me show you what it looks like first, and then we come back. We come back to here. We haven't finished yet. I just want to show you what it looks like. Schedule F in your normal practice, we don't do often unless you are in the form area and a lot, and then so this is like this. When you go to the form like that, now normally how you do is you double check by this. Get this. This is the right person. The EIN, which is this. Now this is the first one, the second one, the third one, the fourth one. So now this is a calculated number. The 1A minus 1B is equal to 1C. Okay. So this is correct at this moment. So basically all the revenue is this. Now, with those all expenses correct with the matching example, let me double check. Now go back to here, second tab, income, F. In the right side screen, far right, it's all expenses. It's right here. I tap up, tap down here. They organized from the letter A to E. The first one is C, as you can see, right? There's no A and B. C and then D, E, F, so far so on. It's pretty easy to. Okay, so now how you do it? If you ask your client also organize the things from A to E, that's pretty cool. And we have an organizer. We can actually let the client fill it. Now, chemical, which is right there. In fact, the numbers changes. But sometimes when you have number there, it's best if you just go ahead to delete them all. Otherwise, you input something on between, and then you're gonna kind of confuse all. The worst is sometimes you're changing things. You know what it's supposed to look like, and then you just don't get the numbers. Now we can get to the first is chemical 1900. Okay. F, right? It is 6750. Hey, if I make mistake, tell me, okay?
Okay.
And this one, 1100. Okay. Now we just finished in here, right? We just finished in here. So far we're good, right? So far we're good. Where is that? Where is the 1900? Did I?
18.
I did not put it in yet. Okay. There are two same 1900. The different items. Okay. Now gasoline. Now the way is easier is like this. Okay, gasoline G.
19.
Yes, could 2300. The real client situation, normally they don't go with even number. This one is all even number. When the client give you the numbers all even, more likely they're not doing their detailed bookkeeping right. It's near impossible. It's possible, but it's very likely possible is all even numbers. Those are the invitation for audit. If you have the tax return like that, or even number, and this is trick, it's easy to trick in audit. Yes. Form business insurance, which is insurance, other than health, which is good, 2500. And then we repair, we go down
20.
like that, right?
20.
Okay. 30? No, 25, right? Yeah, we already finished the insurance. So yeah, so you repair like that, 25, like that, 800. And then sit and it's right there, 1000. Storage, supplies, utility, $8400. Now, so far we finished all the input for this. Now we have not input down there yet. Now we need to input the vehicle expenses. Huh? Now here's how we are going to do it. Like here, on top, do you see line 10 like here? On the little left to the little box, there's a blue button like that. So now there is, okay, hold on. Let me highlight this one. First, let me do this first. Now, had been deduct business mileage on his 2021 truck. The truck was placed in service in this. He drove this much for so he did not use it for any. So this is literally this is a truck for his business only. Okay. Now, in this situation, in this one, it also have those expenses. You should put in here and let the computer, let the software to figure out time to which one is supposed to use, but not So now, remember, those auto expenses is input in this screen, not inside the F. So what is going to happen? And let me do this. We close this one. Let me view for you. I haven't finished yet, but let me just do this. So now F, the auto, it comes out 7,000 even. Now how this number comes from? Now this number goes from, there's a worksheet. There's an auto worksheet in here, like here. It tells you from here like this, you get to this. So and then now from the actual expenses, they go to this. But the better use is use a mileage. Each and every mileage is 0.56, 56 cents per mileage for 2021. 2022 is a little bit higher. So now, as you can see, when you compare these two, the mileage is better. So they use a mileage. Now, in the reality, but this car is placed in business. They should, and also only for business, they could also, when they do the actual expenses, they could do depreciation. But when you use a mileage, you cannot use a depreciation together. Use the actual cost plus depreciation. Use mileage, just mileage alone. So now, let's go back to here. As the using the mileage by itself, you can hear the less of the number. Now, this depreciation, I'm going back to talk about this depreciation. The less of the number, and we have been inputted. So now, we look at for that. There are different assets have been put it in the business. So how to do this? Okay, how to do this? Okay, number one, right here. So now, the first asset is one that identify easy like this. Put a one is have been put in places right here. Let me highlight it in the left side. January 1st, 2023, 20,000. So put the 7 years that have been already used them all and bet in the prior year as section 179 expenses and write off. So there's no depreciation available, but still need to be put it in. Depreciation wise is not good, tax free, it's tax deferred. Right now you take depreciation, but by the time you show this business, accumulate depreciation, which the total depreciation of all these years, it become an ordinary income in the year or you sold the business. So now, number two is a new asset. Number two is a new asset. If you are not speaking, please mute yourself so that way you can, we are recording. Okay, so in here it's a new asset. It's a 5,000. So now, when this 5,000, you just put it in as a first, there's no prior depreciation. So now, the third asset is put in 2021. It's also a new asset. I am doing the 2021 tax return. So right now, there's no prior depreciation. So, and then you need to mute yourself. Okay, thank you. Okay, now we are recording. Okay. We are recording for other people, for the rest of the people. So now number 4. Okay, number 4 is also a new asset from 2021. Now, in this situation, obviously there's no bonus depreciation. There's no prior depreciation. Now, here, do you see the property type? It was 1245, and you see 45, and then this one is 50. Okay, the number 4. Do you see 5 yellow like that? Okay. Now, number 5. I put the 5 in there. It's easier. The number 5 asset. The name 5 is in here, like here. This is an old asset. Put in back in 2017. 3,000 have been fully depreciated, like that. So now, and then number 6. Number 6 is this asset. It's also the old asset, have been fully depreciated. How about number 7? I put number 7 in here. Number 7 is also the old asset, has been fully depreciated, like that. Now, we also have number 8. An example is 2021. Suppose this truck is a new truck. Now, this is 45. So now, in here, we need to make sure this truck, we double click in here, there is a one question we need to answer, like here. Is it under 6,000 pounds or over 6,000 pounds? Let me in here. So now, let me show you the difference. If it's under, what's the difference? And then I'm going to show you over a little bit later. Okay. Now, in here, the last one is not in this example. I just added in when I taught last time. Let me delete this last one. So now, if I put this situation back to view, now looking for the depreciation right here. Let me enlarge this one for you to see it. Now in this, the very first one is the new asset. No, it's an old asset, excuse me. Has been put in the year of 13. So it's already in this column. Do you see PY is prior year? It's already taken those. Now, the next column is the bonus depreciation. The CY is current year. The PY is prior year. Okay. So now, in this situation, the first one, we don't have any depreciation for the current depreciation, as you can see. Do you see it? There's none. Right here. No, you probably see, Philip, how come in under current depreciation, there's nothing there? Does anybody know why? How come this depreciation schedule in the current depreciation column, nothing there? Here's the reason. The reason is they are all taken because all the new is this situation is either some old asset have been fully depreciated or new asset just in place in the year of 2021. So we are doing 2021 tax return. That means that it's current year. So and then from the year of 18 on, even include now, there is a new law allow you to take 100% of that asset as a depreciation. So that's why you can see the second asset was 5,000, and under the bonus depreciation, you take the full 5,000 right there. And the third one and the fourth one, take them all. Now, and then the last one was 45,000. But how come there's only 18,200? Because this car is under 6,000 pounds. The law in the year 2021 tax return that this is the maximum amount that you can deduct it for that year. Since you already take the full amount, the less the money, as you can see, still at 26,800. Still, in the future, you can depreciate it, but not in the year of 2021. As you can see, if I want to show you the future depreciation, here there is a future depreciation. You actually can see. Let me see in the future depreciation, the current year depreciation. Yeah. I need to set it up. Let me see. In here I don't see it. I haven't set it up. There's an option I can set it up so that you can see the next year depreciation. Okay. So now in here, as you can see, the bonus depreciation go down there. There is a 40,700, and this number goes straight to right there. Do you see this flag? And this is as part of the expenses and deferring tax, not tax-free, deferring tax. In this year, you are not paying tax on this, all this depreciation. You only pay tax on the year that you show this farm business. Okay. So now this 42,350, and going back to here, you see that self-employed and the farm business is similar like the Schedule C. They're also subject to self-employment tax on top of income tax. So this is self-employment tax. So now, as you can go back in here, there's a W-2 from the spouse. There is a farm business. And then coming back here, this is a total income. This adjustment is half of self-employment tax minus standard deduction. Guess what is line 13? The QBI. The QBI is 20% of that farm business. So now it's a minus. Pretty good. So become a taxable amount is 71K. So the total income tax is 8167. But line 23, there is another tax coming from Schedule 2, which we mentioned about it, self-employment tax. So, and this person the total tax liability is line 24. Still remember that we're holding 6K for the W2. They also pay estimate tax. Now, as you can see, the 30,000 as a credit. So this is a refund. Now, there's a total amount of this much. So now, in this situation, how come after 12K go to the estimate tax, they still have this much? Because based on this situation, the next year estimate tax is only this much. But when you do this estimate tax, the system takes like this, but here is something you need to put in your mind. You remember this 40,000 depreciation, and it's not going to happen in the next year. So therefore, more likely, your taxable liability is going to be higher. So therefore, it's better to do it like this. Just go ahead, instead of take it all, take some refund back. I say, I'm going to make estimate tax equal to overpayment. So what I'm going to do? That means I take that full estimate tax, full like this. So that way, give some room for the next year. Okay. So now, in here, what if they don't take the bonus depreciation? Now let me go back to the depreciation in here. Now, what if they do not take the bonus depreciation and they are going to need to pay tax for that? So now, for the year of 2021, let's say, for example, those 2021, I can do like this. Those are the first. Now in here, if I hit the bonus depreciation 0, and then paste down, if I hit the bonus depreciation for this, there's no bonus depreciation. Now for this one, if I hit the bonus depreciation 0, and I also, if I hit the bonus depreciation 0, so now what is going to happen? That means the depreciation is going to decrease. Now, do not take a bonus depreciation. You just take the normal depreciation. What is going to happen is like this. Do you see the bonus depreciation gone? The regular depreciation is going to be show up. There's only this much. There's only 5,000. Instead of 40K plus, right now it's 5,000 plus. Now, your depreciation amount will be significant decreases. So the net income significant increase. Therefore, the tax will be significant increase. It was 15,000 refund for federal. Right now it's only 6,000. The difference is 9,000. You see it? So now, let's say, and this person take all bonus depreciation. Just uncheck this one. You see the red color in there? Uncheck it. Uncheck it. Uncheck it. And that's it, right? Down, 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 page down. I hit it page down and page up. Page up and page down. So now, as I go in here, it should go to the 15K refund. That one. So now, the one, let me see. Yeah, you see it? This is the number from here. Now, do you remember I showed you, what if you buy this truck, the heavy truck is over, like for the business to use is over 6,000 pounds. So now let's say, now it's not what I say. You have to go online, search for that name of the truck, the client we're going to give you. So let's say it's over, and then you have to come here. Let's say they are 7,000 plus pounds, but they are all under the 14. So come here, get to this. Over 6,000 pounds and less than 14,000 pounds. Now, in this situation, what can happen? In this situation, that's it. That's the only one thing we change it. Review. Guess what can happen? Let's look at depreciation schedule. It was 45,000, 100% deductible. So 100% for business. We take a full 45,000 depreciation in this year. You see that? So the bonus depreciation, but the current year bonus depreciation becomes 67,500 instead of 40. Okay. So as you can see, you see depreciation increases as in here. So guess what? The net income decreases, right? As the depreciation increases, the net income from the line 34 decreasing. So therefore, you get a huge refund of 22,000. So that's why when you do tax return, you need to interview the client, and you also make sure if this is a new client for you, you need to get the depreciation schedule from the client. And this is called depreciation schedule. Okay. So, and you need to get this, and you copy this one, the from apply year to here. And also you need to interview from the client to see did they purchase any asset. Guess where the purchase asset located to? It's not in the income statement, it's in their balance sheet. If they do the bookkeeping right, the new asset is shown in their balance sheet, not in their income statement. Okay. And also when they purchase something, they normally have some invoice and things like that. So that way you can put it there. So I'm ready for you to ask me one or two questions. If you have any, you need to unmute yourself. No question? Are you sure? No question means it's either I'm so good or you're so good or you're all confused. Which way you are, okay? Are you sure no question? Okay. If no questions, okay, last chance is if you have any questions, please ask me. Okay, no questions. I'm going to finish this classes by now. So, and thank you very much for you to join today's training. Tomorrow, we're going to have a class number 10. So by the end of this week, we're going to finish all classes. And then by Saturday, I'm going to use the Mandarin to train from 9 to 12. So if you would like to watching the old classes, then you go to the YouTube channel. Okay. So, and then also, if you would like to do some internship, or if you want to have an interview, so you need to set it up with us. Okay, besides the training. Now, there is some tax prepare classes you should consider to take it, which is on top of this one, you learn the whole thing, which takes about 60 hours online classes. And I suggest you to take the tax preparer classes and get it so that way you get a very good idea. And some of you already have it, and some of you are taking. If you guys have any questions, you guys can ask each other regarding how to get the tax preparer classes, or as well some people taking the EA or CPA exam. Okay, with that, thank you very much and have a great night. Bye.
Okay, thank you. Good night.
you.
Good night.
Good night.
Good night.